Welcome to Bibo Weekly's Winner's Circle, where winning is always a part of the conversation. I'm Tracy S. Campbell, your host. And yes, we are back, everyone, for another great week right here in the Winner's Circle. Now, you know, each and every week, our mission is to make sure that you walk away from this conversation with actionable, I love that word, actionable advice and information that you can put to use in your life right away. We want to keep you on the winning side of whatever it is you're purposing to do. Now, today we are talking about taxes. Yes, it's that time of year, everybody. We got to talk about it. And of course, with each tax year, there's always something new, some changes and so forth. And we're going to get into that right now. And yes, later in the show, we're going to provide a way for you to stay connected to us as well as stay connected to our amazing guest. Now, she comes to us today, a tax and credit expert, but today we're going to be focusing on taxes. She's very passionate about this area, and we're so glad to have her here at this time of the year, the awesome Alyssa Costanza. Hey there, Alyssa, how are you?
I'm great. How are you?
Glad to have you. I'm doing well. Glad to have you here and glad to have you here at this time because we are literally, if my calendar is correct, Alyssa, we're less than a month or maybe right about a month at that deadline for folks to get their taxes in.
Absolutely. We're coming up on that time. We're coming up into crunch time. And I can't even tell you, people want their money and they want it now.
Absolutely. And they want it yesterday, to be honest, right? They want it yesterday, but I know you're a busy lady. So that's why I'm so glad that you carved out some time for us here in the Winner's Circle today. And so we're going to jump right into it because I know a lot of folks maybe haven't even filed their taxes yet. And they're procrastinating like a lot of us do every year. And oftentimes, Alyssa, I'm sure it's because they honestly aren't sure of what to do with the changing administrations and all the things going on in the world right now. But I want to start with you and what motivated you, Alyssa, to go into this field of tax and credit. What was your personal motivation for that?
So, well, first off, thank you for having me. It's truly an honor. I'm excited to be here. And you motivate me, I have to say.
Oh,
You motivate me, so I'm glad to be here. To be honest with you, I am 100% self-employed. This was never the plan. I never thought I would be here because I come from a family of work hard, get a good job, great
right,
salary, great benefits.
right.
Um, both my parents worked for the same company for over 40 years each.
Wow.
So I would, so the oddball out a little bit, but
Mhm, mhm.
I never expected to be here. Really, how I got started with credit is that a few years ago, I was looking to purchase a home. I didn't know the steps. I just knew that you had to have like 2 years working history, credit, some savings for a down payment. But I'm like, how do I get credit? My parents never wanted me to be in credit card debt, which I still got myself into. I had to learn.
Right.
Um, I was taught, just be careful with credit cards, getting yourself in debt. So I was just researching a bunch of things. I'm that person, I research everything. And I saw down payment assistance programs. And at that time, it was for $14,000. So I'm like, oh my God, like if I just work on my credit and, I fall into those qualifications, they'll give me $14,000 towards my first home. The 14,000 turned into 20,000, and then another program was giving me 80,000. So
Wow.
essentially, yeah. So I was getting $100,000 towards the down payment of a house, but I was just really excited at that time. I was passionate. All of my friends were looking to purchase a home. They didn't know anything about financial literacy. They were looking, because I'm from New York, so it's expensive here.
I was going to ask, where's that accent? I'm an East Coast person also. I knew it was either Jersey, New York, somewhere in there. So I knew it was one of those. So yeah, we're going to get into that, Alyssa. Are things different depending on where you are?
Yeah. So, I just got to be really excited. I'm like, if you just work on your credit and you learn about this, you could apply for a house. You don't have to move to Florida or Georgia. Just stay here. And that's really what happened. I wasn't in corporate America anymore. I just went full force it was scary. You know, I felt like I disappointed my family, but they've learned to accept it. And eventually they were like, how's the business? How's everything going? So I've been fully self employed for 3 years now.
Fantastic. Congrats to you. I'm going to give you a clap on that. Congrats. Because again, entrepreneurship is not easy. A lot of people are enamored with the idea of being their own boss and calling their own shots, but it's not easy. So I commend you for stepping out on faith, Alyssa, and living your dream and making it happen. Absolutely commend you for that. And thank you for sharing that story, because that's going to motivate a lot of people out there, not only the journey of entrepreneurship, everyone, but my goodness, she ended up with $100,000 in help from various programs to purchase her first home. So it's possible. It's very possible. So yes, we're going to transition now, listen, to tax season, because I think a lot of people are probably thinking, man, if I get enough back on my taxes, I can go buy that car, or I can save up for that down payment on that house, or start that business. So a lot of folks are really hoping that they're going to get a great tax refund. So let's get them educated, Alyssa, on what they need to know. Now, I want to start with those of you out there that are watching us that may be in the category of, well, I have dependents, I have little ones, and we hear all sorts of things about the earned income credit and all sorts of other things. So Alyssa, for those that are watching us right now, we're going to start with the folks that have dependents, little ones that they can declare on their taxes. What should we know about for this tax season, 2022 in particular, filing this year, I should say, for 2021 taxes? What should we know about?
So first and foremost, if you made more money in 2019 before the pandemic, I would strongly, strongly advise you to send your past year's tax returns to your tax preparer or your accountant, because if you earned more money, that could be used as a credit, and it makes a world of difference if you have children. So basically it's called the look back credit. So basically the IRS is acknowledging the fact that people have been going through hardship, they've been furloughed, laid off, things of that nature. And I could literally put in what you made in 2019 and you'll get the credit for that. It's made a world of difference. I mean, like thousands of dollars.
Wow. So Alyssa, even though we're currently in 2022, so folks are filing their taxes for the income that they received in 2021, going back to 2019, I want to make sure you all get this. Oh, and by the way, everyone, make sure you get out that notebook and that notepad and start taking some notes. Okay. So Alyssa, I want to make sure everyone gets this. We're filing now for 2021. Mm-hmm. However, you're telling us that, hey, if you made more money back in 2019 before the pandemic, you can still benefit from that right now.
Yeah, it makes a world of difference, like thousands of dollars. It has to be earned income. So literally, we're going to look at your 2019 tax return. I'm looking for those lines. I'm looking for whatever that your gross income was for that year. I put it in and it makes a world of difference. A lot of people with dependents also, with their daycare, their childcare. A problem that I've been seeing is a lot of people, they're not getting invoices, receipts, they're not getting the proper paperwork. And there were a few clients of mine, they're like, I'm paying for my child to go to daycare, but they're paying cash because they were told it could be taxed or they would pay more money or whatever. And they're missing out on that credit. Like, daycare is so much money, right?
It is.
It's a huge cost. And it's like, honestly, the refunds are so big this year. It looks like the PPP loans. Like, I mean, the biggest refund I've gotten so far for someone was $23,000.
A tax refund for $23,000?
Yes. And
wow.
It was so much stuff. They didn't get the advanced child tax credit. They're at a certain level with their earned income.
Right.
They're on Social Security. Both the husband and wife is on Social Security. And they made more money in 2019. Like the numbers, I'm like, let me see something. And they're like, what are you doing? I'm like, this is why I asked for every single document so I could go through it. I'm very meticulous about it. And I want to help you get the most money. So
right. Okay, so I guess the takeaway for everyone right now, for those of you that are taking notes, because I'm taking mental notes, everybody, for those of you that are taking notes, for this tax season, you want to go back and look at your income from 2019, pre-pandemic, we'll just say that, pre-pandemic 2019. Go back, look at that income and make sure that you have your receipts, your W-2s, whatever it is that you need from that year, and bring it along this year, because there could be some monies or some things on there, I should say, that can actually turn into more dollars into your pocket in this tax year. So that's one thing. And especially for those of you out there that have small children, because we want to make sure you get back as much money as possible. So Alyssa, is there anything else that we can tell our folks that are watching that have small dependents for this tax year? So we know that we want them to go back and look at 2019. Is there anything else that they can take advantage of? And can you also explain a little bit about the earned income credit? Because a lot of folks, I think, are still a little confused by that.
Yes. So with the daycare and the childcare, so let me just explain this. So when you're choosing a childcare moving forward, please make sure you're getting the EIN number. That's basically the business's social security. It's like a social security number for business,
Right.
because I can't enter anything without that. You know, you need the name, the address, the phone number, the EIN number. And unfortunately, you're missing out on that credit if you don't have it. Now, if you have someone like a family member, your parents watching your kids, or like maybe your sister, or this person's on social security and you're paying them like, under the table, you need that person's social security number. And
Okay.
that's going to be reported as income for them. So just to be mindful, like, sometimes it's easy to have a relative or a close friend watch our kids. I don't have kids, but watch the children for us, and trying to help them out. But then at the same time, you don't want to get them in trouble, or, put them on the radar. But that's pretty much what's needed. Anyone else with small kids, like I mentioned before, if they're in childcare, if they're in daycare, as far as their earned income tax credit, there's certain limits for how many children you have and how much income you make. In all honesty, if you're making, it's like really in a $40,000 to $50,000 range. If you're making more than that, you're not really getting as much for the credit. Now, let me touch on the advanced child tax credit.
Okay.
A lot of people, they'll say, how much am I getting for this kid? Like, how much for this kid? How much for that kid? How much? It's not like I'm ringing them up at a register, This is something that a lot of people don't understand. If you're not paying your taxes, they're taking that money back. So let's say, like, I've seen people, I promise you, I've seen people, they had like nothing taken out of their paychecks, like nothing. And I'll literally, this is me, I take pictures along the way because I work virtually most of the time. I take pictures along the way. I'm like, this is where you had money coming in, and this is where it dropped. And I'm like, look, do you see out of this whole year, you had $100 taken out of your pay stub. This time, this is how much look at how much you make, look at how much was taken out of the state and federal. And it's not like, how much could I get for this kid? Because now your refund is going down because, Uncle Sam wants his money. So
Exactly.
it doesn't really matter. Like, if you have children and dependents, regardless, you're not paying your taxes or having enough taken out. And some, I can understand some people need, the most of what they could get, or they don't know how to file. I definitely understand that. But that's what happens. And also, if you didn't opt out of the advanced child tax credit, that's the CTC, they advanced you that money. So you're not getting as much back. So that's like you working a job and you're like, hey, you say to your boss, hey, like, I need $1,000, I'm behind on bills. They're like, no problem. And then you're getting upset with them next paycheck while you're short. They gave you that money up front and you opted out.
So it's essentially a cash advance.
Yeah.
Okay. Now that's wonderful. Everyone, again, if you have little ones, dependents that you are taking care of, you're the guardian, you're the parent, whatever the case may be, you absolutely need this information. Make sure you jot it down, and make sure you go into your tax preparer's office with some understanding of what it means to have dependents, and of course, what it means to be eligible for the earned income credit. Now we're going to shift over to those that are watching us, Alyssa, right now that, well, maybe their issue isn't a dependent, but maybe they started a business and maybe that business in their mind isn't making a whole lot of money. So can they, they now want to figure out a way to benefit from the expenses of that business, but they want to benefit personally. What can we talk about there for those that are confused when it comes to Schedule Cs and all these other forms that you have to fill out when you start itemizing things?
Right. So first and foremost, let me tell you from experience, save your money. As an entrepreneur, let me tell you, because it's like the first year I was in business, I was like, I made this money, but where to go to? I was living my best life. I'm not going to lie to you. But it's like, as an entrepreneur, like I've learned, especially around tax season, you really need to learn to be meticulous and very on top of your finances and your receipts and things like that. Like, we're totally self-employed. So think about it. We're not having any taxes taken out. There's nothing or no one that we're reporting ourselves to. So what I'm going to say when I mention savings, you don't want so much taken out at the end of the year and then you get in trouble for not paying your taxes. So if you have an accountant, a CPA, whatever, definitely set something up to have those taxes taken out. It could be quarterly or, whatever you guys choose is best, because it could be huge. And, as someone that's self-employed, we all know that sometimes you have your high times and sometimes you have
Exactly.
your low times.
Absolutely. Absolutely. And speaking of which, and that's a great point there about being on top of your tax payments, especially as a self-employed person. And you mentioned quarterly. I think most people are familiar with, if they're in business for themselves, they're familiar with the quarterly option. Can you actually pay your taxes more frequently? Can you put aside money monthly or every other month? Does it have to be quarterly? Is that the lowest time frame, if you will, that you can use to pay your taxes?
No, you could set something up to have to be paid, like, like you're paying yourself. There's
Right.
different ways. Like almost like you were getting a paycheck or a direct deposit, and it just goes to different ways and different avenues. Something else I'll say with self-employed people filing their taxes, a lot of people don't want to report it because they're like, I made too much money, they're going to take money from me and things like
Right.
that. Let me tell you about some of the tax laws and why
Uh-oh.
you should probably reconsider. Well, hear me out. So there's something called Form 7202, and it's basically acknowledging COVID and the pandemic. So if you made more money last year, but you didn't make money this year, and it's going from 2021, but the difference between 2021 and 2020, it was
Okay.
the same thing last year, okay? But they're saying, like, for self-employed people, if you had a loss of income, they're looking at the difference. And there's a questionnaire like, were you sick from COVID? Did you have to take care of a loved one? Did you have a child or a dependent you had to take care of? And that makes a difference in your return as well. Because we're self-employed. So it's like, what else could we account ourselves for? And something else that I want to bring up is that like I have a few clients, they were looking to start a business and get business grants, get business loans. Some people were not qualified because they didn't file for their business. You
Right.
really should, especially if you're looking to get a house, a loan, anything, you have to be on the books with that. Now, a lot of people also, with what I was mentioning before, with keeping everything itemized and being on top of everything and having your receipts together and whatnot, if you're looking to purchase a home, I'll speak for myself with this as well. Not every self-employed person falls into a regular home loan or whatever. With
Exactly.
all of these write-offs, it could take you out of a certain qualification. So
Really?
yeah, so I remember when I was looking to purchase a home, that year I was working in an office. I made about $45,000 around that time, and I was in another business, I was in a business venture, and I didn't know too much about this. This was just a few years ago. And they're like, do you really make this money? I was like, yes. And they're like, you have $10,000 worth of write-offs. So to qualify you for this house, it looks like you make $10,000 less. And there's literally brackets of qualifications. So I know that people want to get the most of their money now, and some people don't care. They're just thinking about the now. Like,
Right.
they're looking at the number. They're like, is this what you could get me? But you also have to think long term. If you're looking to get a home, a loan of any sort, start something up, they could look at your tax returns. I could make 100 grand, but if I have $50,000 worth of write-offs and expenses, it literally looks like I only made $50,000. So you have to be mindful of this, and
Okay.
definitely file your business taxes,
Right.
because
Now, Alyssa, do you recommend filing those business taxes? And I'm speaking to those of you that are watching us right now that are solopreneurs. You're maybe just starting out. And so you're not making a huge amount of revenue, we'll say it that way. And maybe you're wanting to either bypass filing your business taxes because maybe you think, well, there's not a lot there to begin with. What would you say to someone like that, Alyssa, that's looking at us right now, listening to this conversation and saying, yeah, but I don't make a lot. I just started. What's the harm in foregoing filing my business taxes this year?
there's a few. So if you're looking to qualify for something in the future, they're going to ask you, when did you start this business? Do you have receipts, or just like any proof? And like I mentioned before, even people who do side hustles like DoorDash, Grubhub, Uber, things like that, if they made more money in a previous year than now, and you didn't follow that, well, you have to. That's actually, report to the IRS. But just as an example, you're not qualified for those credits. So even if you have like a side hustle or a side business and you're just starting out, I will tell you, I'm not ever going to say it's small. What you got going on is big, and it's starting off small. You'll
That's
definitely
right.
grow. I believe in you. I speak into all the businesses out there. But even if you feel like it's nothing small right now, you have to you have to change your belief and what you have, because you have that vision given to you directly and for a reason, right? And no one else has that.
Mhm.
Still file, even if you feel like it's nothing big, because in the future you may need it.
Absolutely.
Probably do need it.
You
Mhm.
probably will need it. Yeah, no, I think that's sage advice because again, a lot of folks are thinking, well, I'm just starting out. I'm not making a lot of money in my business. And quite frankly, I need that money to do other things. And you're trying to prevent a disaster. She's trying to prevent a disaster, everyone, that could happen down the road and maybe even sooner than you think. Because what if your business really starts taking off in the next year and the IRS comes in and does this thing called an audit? And they find out that, hey, you did not file those business taxes, even when your revenue was small, in your opinion. So I think that's sage advice as well. And then, Alyssa, we're coming down to the wire here for this part of the conversation, but I definitely want to find out your advice and counsel on those that are maybe married and they decide for whatever reason to file separately. Are there advantages or disadvantages to that? Because we have a lot of folks that may have reasons to file separately, especially if both spouses have businesses and other responsibilities of their own.
So the reason why most people file separately is because one of the spouses owe money.
Okay.
So that's like, and then sometimes people file separately. Like, let's say one spouse may make less of an income than the other spouse, and they're married with dependents. They could take heed of those credits. So it really just depends. But if you're looking to purchase a home or go for anything like that, you want to keep that same like filing status, because it would make a world of difference in how much you qualify for. And that's something else with the write-offs that I was mentioning to you before.
Right.
If you're married filing separately, they may ask, has this person lived with you 6 months or more throughout the year?
Right.
What's the reason for this? If your spouse owes money like child support or back taxes or a past due debt, you need to file an injured spouse form. That means, like, they can't take the money from you. So there's a few different methods and there's a few different ways, but it depends what's going on.
But if your aspiration is to own a home later or to make some other big purchase or significant purchase, or maybe even significant or more significant business endeavor later, are you counseling us that we may want to rethink that filing separate status? Because once we start doing that, we have to be consistent, if I'm understanding you correctly.
Yep. Absolutely. There's a few of my clients getting ready to purchase a home right now, and they were looking into their options. I've personally have set them up with loan officers to help guide them. Like, like what's the best route? And they're like, we're looking at it for it to be consistent. Or like, what is the reason? If someone's looking to file separately, it's really because they're looking to have more money on their tax returns or to claim the dependents, or their spouse may owe money and they don't want that coming on them. And to
Right.
the IRS, it looks like you two are like, how you're legally married, but you're separated.
Right.
Yeah.
Okay. Okay. And so later on, if you decide, maybe you have a windfall, maybe something else wonderful happens to you, and we hope it does. But now you decide 2 years from now in that tax season, okay, we're never going to file jointly. Alyssa, you're saying that may raise a red flag with the IRS.
It might, but you just put the notes in as a tax preparer.
Okay.
Yeah.
Okay. Awesome. Well, everyone, I hope again that you got out your notepad, your notebook, you took some really good notes, because we covered in a very short amount of time, actually, we covered some really important things that you need to know about when it comes to filing your taxes, especially in 2022. And the biggie tonight that I think was an eye opener for all of us is, please make sure you go back and get all that documentation from your income from 2019, pre-pandemic, because as Alyssa said, it can make the world of difference in the amount of money that you can get back on your taxes this year. And Alyssa, I'm still in shock of the couple that received $23,000 on their taxes this year. That's absolutely amazing.
They couldn't believe it either. Trust me.
I bet they couldn't.
And it's in
Wow.
process. I've been checking, like it's in process.
Wow. No, we're happy for them. I applaud them, whoever they are. That's a blessing. We're happy for them. But again, it speaks to what you said about making sure we keep good records of our income from previous years. And right now, because 2 years from now, everyone, we may not benefit from 2019. So this is the year right here to make sure that you get that information in front of your tax preparer. Now, Alyssa, you gave us some great gems, as I like to say. You gave us some great gems tonight in this conversation. Now, if someone is watching and they have decided that, hey, this is the lady that I need to go to, reach out to get my taxes done this year, and whatever else they may need when it comes to finances and credit, how can they reach you directly?
So besides social media at She Does Credit, you could just follow me on my website and fill out a consultation form at www.shedoescredit.com.
Fantastic. Well, we're glad that you took time out of this busy season, Alyssa, because I know you're swamped. Thank you so much for coming and giving us a little education on taxes, because it's very important for those of you out there that are filing your personal taxes, as well as those of you out there that are in need to file your business taxes. And of course, we want to make sure that you stay connected to us right here at Bibo. Yes, you can go over to World of Bibo, World of BIBO.com, and make sure you stay connected to us. We absolutely want to stay connected to you. And yes, guess what? Next week, we're going to be right back here, same time, same place, everybody, here in the Winner's Circle with another great guest giving you winning information, because we want to make sure you stay on the winning side. Thank you so much for tuning in. And yes, we're going to continue the conversation. But in the meantime, what do I always say? Make sure in this crazy world that we're living in right now, everyone, make sure you stay safe, you stay healthy. Most of all, you stay blessed. And we'll see you next week.